Ladies and gentlemen, good day and welcome to the Kellton Tech Solution Limited Q3 and FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I would like to thank you all for participating in the company's earnings call for the third quarter of the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature, and such forward-looking statements are subject to risk and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and a financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintam, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, India, and Mr. Srinivas Potluri, Chief Executive Officer, US. I now hand over the conference to Mr. Niranjan Chintam. Thank you, and over to you, sir.
Good evening, everyone. Thank you for joining our Q3 earnings call. Want to start off with highlights of the financial highlights, and then we'll talk about the operational highlights, and then we'll be happy to take any questions that you might have. So I'll start off with the financial highlights. For the Q3 FY23, the consolidated revenue was 231 crores with an EBITDA of 26 crores. And a profit of 16 crores. The earnings per share is 1.79 or 1.8 rupees. This revenue was a 5.3% year-on-year growth and about 2% quarter-on-quarter growth. For the 9 months in review, we have a revenue of 676 crores, which is about close to 6.8% year-on-year growth, with an EBITDA of 77 crores and a net profit of 49 crores. And earnings per share is 5.39 rupees per share. Coming to the operational highlights, we last quarter, Kellton was rated in Zenova Zone's ER&D services rating, which is the first foray into ratings-related activity that Kellton has taken. And we are happy to inform you that we've been rated very well as a leading digital transformation company. On the other operational highlights, we have hired Vivid Baru to head our digital practice, and I'll let Karanjit and Srini give you more details on this, what the hire means, and also Zenova Zones, what it means to us as well as to the customers. The third highlight that we want to bring up is, we launched the LEAP. It's a new learning initiative for the internal company employees. So this is again, I'll let Karanjit explain to you in detail on what that means to our company as well as our employees. With that, I want to first hand over to Srini to talk about Vivid Baru. Vivid Baru is based out of California, so I'll let Srini give a little bit color to what it means to the organization and what he brings to the table. Srini?
Yeah, great. Thanks, Niranjan. Good evening, everyone. My name is Srinivas Potluri, and I'm joining the call from the US. Like Niranjan mentioned, Vivid Baru. Vivid has joined us in November of last year as the SVP and Global Head of the Digital Practice. So he will be managing the digital practice at a global level. He comes to us from Harman, a division of Samsung. He comes with over 20 years of industry experience and is a technology business leader with an exceptional track record of delivering results and transformation. And his focus is on customer centricity, top line and bottom line growth, client acquisition and operations. So at Kellton, we will fully leverage his industry experience, his network, to focus on large accounts and large deals. We have had planning sessions here in the US as well as in India with him and the rest of our team to figure out our go-to-market strategy in 2023. So we will be working very closely to make sure that we do some large account acquisitions and land some large deals this year. That will be the focus on our activities with Visit Bharat. Thanks, Ranjan. Want me to add anything else? We good on that?
No, that's for now. Unless we have some questions that come about, we'll answer that for you. Thank you, Srini. Karanjit, can you talk about what Genova Zones and what LEAP does to our organization and as well as our customers, please?
Yeah, sure. Thank you, Niranjan. This is Karanjit. I'm the CEO for Asia Pacific, based out of Gurgaon. So, Genova, as you all know, is a respected industry analyst, and they assess a lot of IT services, IT companies in the various categories. And we participated for the first time in the Genova Zones ER&D survey and report under the small and medium service providers. And, we were directly featured in the leadership zone. Now, it's very typical that, organizations will participate and then, move from their nurture zone to break out to execution. But we have directly been featured in the leadership zone, along with the likes of all the big, companies like Cognizant or Infosys or Persistent. Everyone is there. Now, this basically reflects our kind of track record and maturity that we have developed over these years, and this was the first time we participated, and we directly, were listed in the report in the leadership zone. What this does is it gives a good validation and a comfort to the customers on our capabilities, where a leading analyst kind of rates us that way. So that will help in our growth journey, and the digital growth that we are targeting that Srini talked about. On the LEAP initiative, now this is what we call, there's an internal initiative that we created. It's a fast-changing world on the digital side. So we have created a learning experience in peers. That's kind of what it stands for. And if I were to give a simple parallel, we have modeled it on something like I call it an internal TEDx for Kellton. So what we have is our various experts across the globe. There's a particular format, so they kind of come, speak about, certain topics, hot topics, and then there is a Q&A format as well. So this is a LEAP is a mission kind of that enables our employees to leverage collaborative learning and knowledge sharing amongst the peers. So yeah, those are the two things. So over to you, Niranjan.
Thank you, Karanjit. So operator, go ahead. We are ready for questions. So can you form the queue, please?
Certainly. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Ankur Agrawal from RC Wealth Solutions. Please go ahead.
So my two questions are there. Firstly, why the promoter reducing stake from last 2 years continuously? And second, why the not giving any dividend?
So, I think there was a one-time reduction. I think that is something that happened last year during the time of COVID. And I did explain at that time that, this was more towards, having some liquidity for the family as well as for the corporation. That's the reason why we did that. We have not been reducing. Any share reduction that you're seeing is an impact of employee stock options that have been giving. So when the employee stock options have been rolled out, proportionately our shares have come down, but not because of dilution. Okay, it was a one-time dilution, and we did talk about this extensively just around the COVID and after the COVID time frame on that. Talking about dividend, we did give out dividend once, and then we wanted to conserve cash. Given the uncertainty that is going on within the industry, as well as the economy, and our growth strategy, we have decided that we want to conserve cash and use the cash within the organization for growth of the organization versus giving out, where the largest share of dividend is going to go for the promoters, which we felt did not make sense. We will revisit this thing as and when the economy and the world over the uncertainty stabilizes, and when we are able to feel that the cash cushion that we have is enough, we would be happy to relook at this and provide dividends again. But at this point, I think last year we didn't do that. The prior we did, and this year also we do not have any plans to give out dividends. And we'll be wait and watch mode as to how the economy world over stabilizes, and then we'll decide.
Okay, that's okay from my side.
Thank you, Uncle.
Thank you. We have our next question from the line of Purushottam Savlani, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes, you are, Purushottam. Go ahead.
Okay, great. I have a couple of questions. One is I wanted to understand, I keep track of other mid-cap and small-cap IT organizations also which are operating in the geographies where we also operate. So wanted to understand, while there is a discussion about slowdown, recession, etc., but in fact, if you look at all the peer-level competitors of ours, they have delivered 25% odd sales growth. At the same time, OMs also hover around, say, around 25 odd. Now, we operate in the domains of digital transformation, enterprise solution, consulting and all, which should fetch nothing less than 25 to 30% OM, which is what the industry norm is. What we are delivering is generally what the infra services or staffing players, or for that matter, BPS players would deliver. So one, I wanted to understand where are we struggling and what is the path to improve this OM to industry level. And second, I wanted to particularly understand the new age technologies like blockchain, AI, etc. What is the demand outlook we are seeing per se in India, and India particularly I wanted to understand. That's
okay. Let me first, I'll take the first question and let Karanjit, the technical expert, answer the second part of your question, Purushottam. The growth, you're right, our growth has not been as great compared to the peers. You can argue that if you look at from an absolute number perspective. Now, what you're not looking at is along the way we diversified some of our companies that we had. We did a major consolidation, org, and how we do business. And that has also required us to pause last year to come up with that what we call the One Kellton initiative. And that initiative is now complete. We are in the fag end of a change in brand strategy. All that, we are probably 1 quarter away from finishing off the One Kellton initiative. So we believe that given, let's say, a steady state of the economy, because there are headwinds that you probably have heard about world over other than India, where, for example, Europe, right? Europe is struggling when it comes to growth. US, there are some headwinds we are seeing to the economy as well as inflation related to that. So the growth numbers, for next projected year, it's just uncertain at this point. But, we believe that we are now currently geared towards, after all this restructuring, having off some of the businesses for leapfrogging and getting to that 20-25% growth that we wanted to get to. And we will be getting to that probably starting 2024 calendar year, should see growth. Again, like I said, with the caveat that the economy world over stabilizes and we are on a steady state back before what we were in COVID times. Okay. Now coming to the second question on the blockchain, Karanjit, can you answer the new age technology, what we are seeing with the customers?
Pardon me. My other part of the first question was with regard to struggling OM. See, the domain what we operate in, digital transformation, enterprise solution consulting, should fetch nothing less than 25-30% OM, which is what we see. I mean, the kind of OM what we are delivering is generally delivered by staffing companies or, for that matter, infra services or BPS kind of organizations. So why are we struggling with OM while one can understand demerger, and because of that sales growth has not happened and other stuff? But as far as the OM percentage is concerned, why are we operating so low?
Operating margin. I'm sorry. Okay. Operating margin. So I missed that. You're right. See, you're right compared to the peers, right? For us, if you look at on-site, off-site delivery method, right? We do a lot of on-site delivery. What you see with other companies is that offshore is where most of the delivery happens. For us, it's skewed the other way around. We have, when I'm talking purely from a dollar terms, probably about 80% of our delivery from a dollar term happens in the US and Europe. Right? That is the reason why you see the operating margin level, which is lower for us. Okay, we are trying to change that. Given the size of the organization we have, it has become a little bit of challenge, but we are gearing towards that too, which is what I call the One Kellton initiative, where earlier we had pockets of delivery, pocket of excellence of delivery happening from different geos, and that is now a global delivery arm we have formed, and that which should leverage these benefits of, I'm going to call the low-cost centers like, India and also Poland. We are better geared towards that than what we were earlier. So that's why I said 2023, even the revenue as well operating margin would see a jump.
Okay. So are we saying that once we have these offshore centers, we'll be able to get our margins to around 25-odd%?
We already have those sites. It's just that we were not leveraging the way that we were now are doing. Okay? That is something that we have changed that model completely. So we should be getting better margins. We would get to that 25 incrementally, but we're going to get there. Yes.
Okay.
Karanjit, do you want to answer the second part of the question where the blockchain, the new age AI-related stuff, that what we're doing and how many customers kind of related stuff?
Sure. So, if you've been on our previous calls, we would have spoken about we have actually developed a complete platform, NFT-based platform, which is based on blockchain and crypto and a crypto wallet. We created that about a year back, and so we have deep capabilities there. In fact, we have a sizable team as well that was trained on various blockchains and cryptos. And we had a couple of customers which are kind of leveraging that capability and developing further on from there. We actually even created our own platform for people which leverage blockchain and NFT, so that they can have rapid deployment and of course much more economical in terms of the pricing to them. So that's what I'm continue to work in that area. Of course, the is a little low.
Can you repeat, please?
Sorry. Yeah. So right now the sentiment on the startups which really use a lot of these technologies is a little low in terms of funding. So there's been kind of going along with whatever the market demand is. Coming to AI, your question on AI. So obviously AI can be leveraged in various areas, but one use case that we find frequently is basically application of AI to basically data engineering. So that is something that keeps is a case, and we kind of have been working with various customers on applying AI for insights. All of them have captured a lot of data, and everybody wants to now leverage AI to develop insights and then personalize products or personalized issue things for their customers. The other thing that is, I'm sure, if you track, that is creating a lot of right now excitement in the market is ChatGPT. I mean, obviously, this is just about coming in the last 2 months. We also have put our teams to kind of examine that. In fact, we are doing a lot of internal initiatives, including a hackathon, which is like we're gamifying, some idea generation and application of ChatGPT in solving real life.
Mr. Saulani?
Yeah.
You're breaking, sir.
No, I'm not speaking.
Karanjit, and I think your voice is breaking. Let me answer that, Purushottam. Let me add to what Karanjit has said. So we work with a number of startups, and like Karanjit was pointing out, we have built blockchain platforms for NFT, and NFT was a rave then, now it is not anymore. But that platform can be leveraged to provide other blockchain solutions to our customers. And the AI part, yes, AI is a new buzzword that is happening all over the world, especially with ChatGPT. AI is like people are talking about is a specific task-related AI is doing extremely well, and we are working with our customers. And like Karanjit was mentioning, our niche area that we are focusing on is on the data side of it, extracting meaningful, intelligence out of the tons and tons of data that is being generated every day, every year. I think it's going at an exponential rate. So that is something that we are extensively working on. There are a few platforms that we have built internally that we are leveraging to provide faster solutions to our customers, so that they can get meaningful information very quickly versus taking a normal a software development cycle. Without that, we are able to leverage that. Those are the solutions that we are providing. Now, coming to ChatGPT, it's probably a lot of curiosity on ChatGPT. There are a lot of use cases, specifically the language-related and activities around it. We have formed a hackathon, like Karanjit has mentioned, and we are trying to come up with use cases. Some use cases we already have, a few additional use cases that we are coming up with, so that we can talk to our customers about these use cases. While internet has a few use cases that they've already have published about, but we are trying to get to industry-specific use cases within our customer base, so that we can talk meaningfully to them and say, okay, hey, this is something that we can do today. This is something that would require ChatGPT plus something else to get you to what we want to get to. So those are the different initiatives that we are working on.
Okay. Thanks, Niranjan. In fact, I'm a new investor, so all that helps me understand what exactly we are doing. My question specific was with regard to India. Are we seeing the demand outlook for blockchain AI in India? How's the demand pipeline from India per se looking like? Because I'm aware, blockchain demand in Dubai or all these US, etc. is there.
Yeah. Okay. So I guess I misunderstood your question there. Karanjit, can you talk about that? Your voice was breaking up, Karanjit. India specific, can you talk about blockchain in India?
Yeah. I hope it's clear now.
Yeah. Yes, it is. Go ahead.
Right. Yeah. So, specifically to that question, we have not had, if I were to ask you, the demand that we have seen for blockchain in India has not been the kind that we see, let's say, in the US or Dubai, as you mentioned. So it's been here. It still continues to be people focusing on their, customers focusing on building their digital product, which is essentially the whole digital side, mobility, and all that thing. The blockchain, no, not too much demand in India per se.
Okay. Thanks for answering my question. Wonderful talking to you, Karanjit and Niranjan. Thank you.
Okay. Thank you, Purushottam.
Thank you. We have our next question from the line of Bhaumik Shah, an individual investor. Please go ahead.
Hello.
Hi, Bhaumik. Go ahead.
Hi, this is Bhaumik here actually. So now my question is actually, you spoke about, I think I was there on a last Concall as well. I think there you spoke about this one Kellton initiative actually. And today's Concall you mentioned that actually I think it's in a finishing line and we are 1 quarter away to just get it completely roll out.
So just wanted to understand from you actually, one quarter means you are talking about this quarter ending this March or first quarter of next financial year?
This quarter ending is what we are talking about.
This March quarter, right?
Correct, yes.
Okay. And once this initiative is rolled out actually fully, how we are planning to take the leverage onto our company's overall performance and all actually? So can you just briefly elaborate on this?
So I think, we talked about this, Bhumit, before in the previous call. So I'll let Karanjit and Srini also jump in, where they can add more value than I can on this. The initiative is meant for earlier, like we talked about, right? We were selling in specific, what we call verticals in technology as a separate business unit is what we've been doing. So what that was doing was they were only selling their bit and not the complete Kellton capabilities that are available to our teams. So that walls have been broken. Now everybody is on the same page, as well as they understand all the capabilities that Kellton brings to the table instead of that particular vertical that earlier that people were selling. So we are now able to provide a complete end-to-end solution seamlessly to an enterprise compared to what we were earlier. That is one from a customer point of view. The second point is from the employees. The employees are now able to grow in the Kellton organization versus the BU that they were growing. So there's a renewed effort of the employees, retention perspective, career growth perspective. People are seeing, hey, I can go from, let's say, I'm just making stuff up, from India to Europe to US, or other way around, where people are coming from US who want to relocate to India. They're saying, okay, hey, this is great. We can do similar work, wherever you are in the global organization, or new roles that they can get. Okay, within the organization, and customer is getting a complete end-to-end solution, which was, yes, we were saying that, but we were not doing it. Now we are saying and we're doing it, is what the One Kellton initiative is. Karanjit, Srini, anything you want to add to that?
Yeah, Niranjan, I think you covered it pretty adequately. I think the One Kellton initiative is threefold. Like Niranjan mentioned, one is customer centricity. It improves end-to-end solutions possible to the customer from a perspective of portfolio of services, and from a growth perspective, it removes all the barriers, whether it be geo-based or BU-based. And then thirdly, the employees, right? It makes a lot of sense for the employees to be part of an organization that is consolidated and that has opportunities at a global level. I think those are the three main points that we started off on the One Kellton journey, basically to remove any barriers that might be there from a growth perspective.
Thank you, Srini. Thank you, Bobby.
Okay, thank you so much. Thank you so much.
Thank you. We have our next question from the line of Rajesh Mundra from Anubhav. Please go ahead.
Hi, Rajesh.
Good evening, sir.
Yeah. What can I answer for you?
What is timeline for company to achieve revenue of 1,500 crore rupees?
So I don't want to be in that game of giving you some timelines there, Rajesh. I appreciate you asking that question. We do want to get to that 1,500 crores sooner than later. Currently, we are working on smaller targets, just like what they call in cricket, right? So let's work on the next 10 runs or something like that, right? So we are working on the next 100 million, and our target for 100 million is, within the next 3 years, or less, is what we are targeting for getting there. This is pure organic. Along the way, if there's something inorganic, we'll definitely look at that, but we're not actively looking for inorganic growth. So our current goal is to get to 200, 300 million is what we have put the targets on, and then we'll start working and building on that. As we are building more and more muscle, like we would be more and more confident into taking larger customer revenues Today we are working on 10 million plus revenues, but we want to get to a stage where we can get probably 20, 30 million plus revenue per customer, and we need to build up scale for that. And building up that scale, not only requires lot of capital, muscle power when it comes to leadership level, as well as the staff that is able to deliver to that kind of capability. So yes, we are building to get to the next billion company, but we are mindful of having smaller targets to achieve them, and then work on a larger one. Otherwise, we might lose focus and might be doing something that we should probably shy away from, or resist that temptation. Thank you, Rajesh.
Mr. Mundra, you're through with your questions, right?
Yeah, let's go to the next one.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Shahnawaz, an individual investor. Please go ahead.
Hi, sir.
How are you?
I'm fine. How are you, sir?
Good. What can I answer for you today, Shahnawaz?
Sir, first of all, I feel like the Sweet 16 is your favorite number. That 16 crore is coming. I can see the quarter number PAT is always 16. So that's Sweet 16.
I'm sorry. I don't know why it came about. We don't have that.
So actually, So, sir, I think people have asked this question, many of us. I have two basically questions, because I will not ask when we are going to increase the bottom line, because bottom line I don't know. I'm not sure how it's going to happen, because the 5 quarter it is flat. And my question is as of now in December, how is our healthiness of cash flow? How much cash in hand is there? And my second question: what is the order book we have as on 31st December? That's all.
Okay, so I'm going to take the second question first, because I'm going to wait. I need to pull up the cash because I don't have it handy. I'll pull it up, or I'll get my team to pull up the cash position shortly. But to answer your order book side, so typically we have 8 to 9 months of order book revenue-wise. So if you're looking at, let's say, I'm just making numbers, roughly 800 crores over 800 crores is what we would achieve, or close to 900 crores we would already achieve for this year. So of that 8 to 9 months of this is what we would have, or 3 quarters of a year revenue is what we would have as order book. Okay. So that is a thing. But I'll answer your question, because our team is filling up the cash numbers. As we go on, I'll answer that question to you. Okay. I think from the perspective of cash,
Can I ask one more question, sir? Ratio of employee, I was listening to you. You said the employee, we have on-field more and off-field less. That's why the PAT is as a pressure, is always we are seeing the pressure. So now, sir, from previous year to this year, how is the ratio change, and what is the total strength of manpower we have, and what is the future you are looking any forward guidance you are looking you want to hire, as because there is a slowdown. I was reading always in newspaper there is a people are Facebook is tracking people, then Google is tracking, Amazon is tracking people. So whether in your case also you are going to de-hire people, or it's you want to increase, and what is the strength and how is the ratio now? What is in US and what is in India, and how you see future, where you want to plot that, so that as an investor, I will also I always will wish if my share price would go up, as a Kellton as a whole, whoever is available here and across who is bought, they will be happy if the share price goes up. And the share price goes up only when the bottom line goes up. So and everybody in the call, I feel eagerly want to understand and want to know how, because one of the company, Axis Cat, I was attending their call yesterday. So they have given a guidance, the 400 to 500 basis point of EBITDA margin. They want to improve. They have the intent to improve they have this intent to improve in next 2 to 3 years. So is there any kind of commitment or like any kind of target? I mean, at least wish list that you want to have it, sir?
Okay, sure. Let me first answer the question related to the number. Today we are over 1,800 employees, and of them 1,400 are in India. Rest of the 400 are spread all over the world. Of that 400 is in the US, and then Europe, and then some in Asia Pacific. Okay. To answer your question about hires, we are very selective. While we have probably, I would say, about 200 open positions that we have today, we are looking and listening to what not the street, but what the industries are saying. While there is no slowdown in some of the initiatives that we see in US and India, but we are seeing headwinds, right? Where the customers are saying, "Hey, 2023, we would like to talk to you about possibly looking at probably re-engaging or slowing down on the initiatives that we have." So we are being very careful, selective in hiring. With that said, right, our recruitment team is actively hiring people. What the number is, I don't want to say today. Probably a quarter from now, I would probably when we have our call in May, I would be able to give you a better assessment, because by that time we'll get some indicator of what is going on in US. While Europe probably is going to be a difficult story, and India is on the hiring or revenue-wise, India is growing for us. We're also seeing that the margins-wise, right, employee costs have gone up dramatically, and that is something that that also is putting a pressure on our margins. For some of the questions that the earlier callers have asked, so that is something that we are very careful. So coming to the margin side, right, at this point, I don't want to predict and say, okay, this is what it is. Our ambition is to get to an EBITDA of closer to 20% by probably 2024 is what we are thinking. I'm talking calendar year 2024. Financial year 2024, we would like to be closer to the 20% than what we are today. We were at one point in a higher number, but we have lately pulled back. That is a reflection of increase in our labor costs. Yes, we are hiring also for the projects in anticipation, and that is continuing on. We do see some slowdowns in some pockets, but not as a general rule everywhere. Okay, I hope I've answered your question, but beyond that, right, I cannot give you specifics because I'm still on a wait and watch mode of what is happening in the industry.
Yeah, sir. Thank you. And how is Q4 you are looking, sir? Is it like, at least now we are in mid of February, so half of the information now, 45 days. So how is
if I give that information out, Shanawat, so I just can't do that.
Yes, sir?
I said I cannot give that information out because I will be in trouble with the exchanges if I give some information like that.
It's not. Okay. Noted.
Okay.
Thank you, sir. This was from my end. And we all wish that our collective wish and your great efforts and leadership to bring the best of the result. Thank you, and all the best to the team.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Nikita Bansal, an individual investor. Please go ahead.
Hi, am I audible?
Yes, you are, Nikita. Go ahead.
So I have two questions. The first one is, how is your Europe strategy going? And the second one is, earlier you had talked about writing off goodwill and shrinking the balance sheet. So have you decided on a strategy for this?
Thank you, Nikita, for the question. let me first answer the Europe one. Europe, last calendar year has been a challenge for us. We have recently made some leadership changes there that would improve our margins in Europe, as well as, we're looking at to continue to grow there. While 2023, like I said earlier, is going to be a challenge, 2024 onwards, we are anticipating that it will be on the growth momentum than what it was. And this was a change in strategy because some of the initiatives that we did not work out for last year, but hopefully for 2024 calendar year. 2023 is going to be challenging. 2024 onwards, we should start seeing the implementation of the plan that we had earlier. Answering a question about the balance sheet shrinkage, this is something that, we struggle with every year where we say, okay, hey, what do we do with the goodwill? Goodwill is sitting heavy on the balance sheet, and also our balance sheet has bloated a little bit. So we have hired a consultant to help us come up with a strategy. So we are in active discussions to see if we can do a one-time write-off of goodwill and any other things that are on the balance sheet that are causing this bloatedness of the balance sheet. We are actively talking to our CPAs all over the world to get their feel for what we can do without causing major problems to the existing banking relationships and our covenants that we have. So we are actively talking to them. So we would be in a better position by probably a month or two from now to make a decision. So, but to answer your question, yes, we are leaning very heavily towards taking a one-time hit on the balance sheet to clean it up, not clean it up, more than clean up, to reduce or shrink the balance sheet size, so that some of the ratios and the questions that all of you have asked me many times on why not just take a hit, one-time hit, and write off the goodwill. So that we are looking at. What we are looking at is probably is more from taking a below the line kind of a hit versus above the line hit. So those are some of the things that our consultants have been talking to us, and we will definitely make a decision this time and shrink the balance sheet as much as possible, so that the coming years we will have a better ratios when it comes to ROE and ROCE. So those are the things that we are looking at. So just wait and watch is what I would say, but we are definitely leaning towards taking a hit. Thank you, Nikita.
Thank you.
Thank you. We have our next question from the line of Sanjay, an individual investor. Please go ahead.
Hello. Hope I'm audible.
Yes, Sanjay. Go ahead, Sanjay.
Yeah. So, I'm saying that, the quarter 3 was, again, because what I hear that one Kellton initiative is again now almost at the end, as well as it was, again, the quarter where revenue generally slower quarter for the IT company. Still, I'm saying that there is a 2% increase in revenue for Q3. And bottom line is almost same, but I understand. So I want to just know that how you see. I mean, I know you cannot give an exact number. That's what we just said. You cannot give a number. But are you saying that quarter 4 and quarter 1 of next year is that going to be better than Q3? I mean, are you saying that it is going to be better than Q3 from the both perspectives, top and bottom line perspective?
So, Sanjay, you're right. And generally, Q3 for us is cyclically not a great quarter when it comes to customer relations and our revenue because of the slowdown in US and Europe, and also number of holidays that are there in end of the year time frame in the US side. So to answer your question on the margins, right? We just did an appraisal in January of this year. This is a standard appraisal cycle for the calendar that we do for all our employees. Yes, our salaries have increased, so there will be some effect for this quarter too when it comes to the margin side of it. From a revenue perspective, I just can't give you some guidance at this point without getting into trouble. So I just don't want to do that. But the numbers-wise, probably I would say the margins would be around the same. That is all I can predict at this point because of the increase in labor costs again. But what we have tasked, the Srini and Karanjit have tasked sales people all over the world is, while our labor cost is going up, our bill rate has not gone up proportionately. So they have taken that challenge of increasing the bill rate, and they are in active discussions with customers, and are saying no to customers wherein our margin is not to what our requirement is. But that is a work in progress. It will not be one quarter we're going to get all of it. But starting probably Q1 next year is when you start seeing margin improvement when it comes to that. And it's nothing to do with One Kellton initiative. It's just that the cycle of salary appraisals as well as the customer willingness to pay more, given the headwinds that we're facing in the economy all over the world.
Sure. And one more question about, you just mentioned about you'll be having annual appraisals, which will be for this quarter. But are you hiring freshers, or how many freshers will you hire in a year?
So to answer your question on the fresher hiring, yes, the salary appraisal has happened in January, month of January. So that is now passed. So we have done that and it's done. Coming to hiring of freshers, I'll let Karanjit answer that. But last year, I think we were over 100 freshers is what we hired. What is the plan for this year? I'll let Karanjit answer. Karanjit, can you take that?
Yes. Thank you. Yeah, last year, as Niranjan said, we hired almost much more than what we usually do. So that was about 150, and we're still sort of absorbing them in the projects. And for this year, our plan is to be doing about somewhere between 50 to 75 as we see as we progress during the year.
Sure. Thank you, Karanjit. Because last quarter, every quarter, only you release a PR which has some information about what different wins and maybe a highlight of the quarter. I haven't seen probably the PR for last quarter on that. But generally, so the number of wins or order wins in last quarter, are those now better than the last Q2? Q2. So how you are seeing the business going right now?
Okay. So
on that.
Let me answer that, Sanjay. I think that was an oversight from our team to put that number in. We had 7 new customers that were added last quarter. It's just that we have not included that. And generally, right, like I said, right, this quarter or last quarter is not a great time to add new customers. Again, activity slows down starting November, and it will go back. It will go back to again back to normal starting February when the customer starts opening up. So we would anticipate that it will start picking up this quarter again compared to what it was last quarter.
Sure. Thank you. Just I have last question. I'm seeing that definitely as growth and it's consistent happening and it's not going down. Only now I know the share price is not in your control. That is something market decides. My question is about, are you having any discussions or any investor meets or analyst meets? I'm not seeing even much of the meeting happening, investor or analyst meeting happening and covering this company. So are you planning such meetings or are you having it, or what's your plan to get more coverage from the investor analyst perspective?
Okay, so we have done a lot of analyst meetings in pre-COVID time. We have not done post-COVID. We do want to do that. That is one of the reasons why first we're trying to get some external validation. Zinova is one initiative. We have with another rating or analyst companies like Zinova to get us. So there's a lot of, we're going to start because now like COVID is now post-COVID time, travel has opened up. We would be actively getting involved back in the analyst slash rating slash other activity, marketing related, PR agencies. There's a lot of initiatives for this calendar year that we have restarted, that we have stopped over the last 2-3 years. So yes, you'd start to see those taking place soon.
All right. Thank you for the update, and wishing you all the best.
Thank you, Sanjay.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Participants who wish to ask a question may please press star and 1. We have a question from the line of Devi Datta Gowda, an individual investor. Please go ahead.
Hi, Dave.
Your voice is coming muffled.
Inaudible?
No, there's some issue on the phone.
There's some static. If you want to take me off speaker and just speak from the headphone itself.
Am I audible now?
Yes, you are. Go ahead.
Hi, Niranjan. Thanks for giving me the opportunity to ask a question. So, Niranjan, I read your annual report. Back you mentioned that we will soon reach to $200 million of revenue. But the way we are going, I think it will take more time to get there, right? Because the revenue, even though we are every quarter we are our deal is increasing, right? Last quarter you told 10 clients, this quarter also 7 clients. So how many don't we have repetitive customers, or they are moving from India? That's why our revenue stands still, right? Since last I would say 3-4 years. More over between 800 crores.
Yeah, Dave, I think your voice is pretty bad. Can you mute yourself? I'll answer your question. I think I got your question. Let me answer your question. So, Dave, our strategy has always been twofold, right? For us, 80% of our revenue comes from existing customers. So what Vivid and team have now been tasked is to get or increase the per customer revenue then from X to Y, or 2X is what we're talking about, right? So the 2X revenue from existing customers is where we are going to leverage and get more out of existing customers, right? While these new customers that we acquire is for the long-term part of it, for the short term to increase revenue, we are working with the existing customers to get 2X revenue from the existing customers. In some cases, what we call the named account or customer-based marketing initiatives, right? That we have started off. We have identified, categorized the customers into multiple buckets. Where we believe we can get more revenue, we are doing aggressive client or customer-based marketing to get more revenue out of them. So we are actively and aggressively pushing to increase the revenue from a customer. We're also looking at new customers because we do want to get additional customers. It'll take anywhere from 6 months to a year to get significant revenue out of new customers, while it's easier to sell to our existing customers. So that initiative has already started, and there is renewed emphasis and focus this year from Srini, Vivid, and Karanjit to get increase per customer revenue from X to 2X. Thank you, Dave.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. As there are no further questions, I hand over the call to the management for closing comments. Over to you, sir.
Thank you. Thank you, everyone, for joining our Q3 earnings call. We'd love to meet and talk to you more. Looking forward to seeing you on the next call. Or if your path takes anywhere to Hyderabad or Gurgaon, please do look us up. And we'll be happy to give you more information, and also for you to come and meet our employees and understand us more. Really appreciate all of you for your continued interest in Kellton. We would be doing much better. Just bear with us. Thank you for your patience, and then we will be doing much better starting Q1 of next year. Thank you, everyone.
Thank you. On behalf of Kellton Tech Solution Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.